Okay, let's unpack this. Financial planning, well, it can sometimes feel like trying to build a castle on shifting sand, right?
It really can.
But what if there were some foundational elements, these crucial bricks, that could secure everything you're building?
Hmm.
Today, we're doing a deep dive into insurance. It's a topic often, oversimplified or maybe seen as just a necessary evil.
Yeah, people don't exactly get excited about it usually.
Exactly. But it's absolutely fundamental to financial resilience. Our mission here, to distill the strategic insights, give you the knowledge to really fortify your financial future.
Exactly. And what's compelling, I think, is that insurance isn't just a product you buy off a shelf. It's a system, a pretty sophisticated one,
The
actually.
system, how so?
It's designed to provide this real sense of security and peace of mind. Our goal today is to cut through the jargon, help you understand how this vital tool acts as a buffer
A buffer against.
against having to bear the full, often crippling cost of life's unexpected events. You know, it's about laying those essential bricks in your personal financial wall.
Got it. So let's start with that fundamental building block then. What is insurance at its core?
Right. At its heart, it's about managing risk. It's a financial product that protects people from, well, financial loss.
So you pay these regular, predictable amounts, premiums, right?
Correct. Premiums. Small amounts of money usually. You pay those to an insurance company.
And in return,
In return, that company promises, it commits, to cover certain types of losses or expenses when something bad happens. Basically, it's a contract.
a contract where you sort of transfer a potentially massive future cost for a smaller, manageable one right now.
Precisely. And the value there isn't just the money, though that's obviously key. It's the psychological freedom it offers.
Peace of mind again.
Yeah, that underlying value proposition. It reinforces this idea that you don't have to face life's major financial shocks all alone.
Okay, so for you listening, understanding this is key to seeing insurance not just as an expense you have to pay.
Right, but as a proactive, strategic investment in your future.
Yeah.
It helps you avoid having to bear the full cost yourself.
Okay, that makes sense. With that foundation laid, let's dive into life insurance. This one, it gets really interesting, doesn't it?
It does. It's so tied to protecting our loved ones.
Yeah. It's basically a contract between you and an insurance company. You pay regular premiums,
Uh-huh.
and if you pass away, the company provides a significant lump sum of money to your family or whoever you've named as beneficiaries.
And the core purpose there is pretty straightforward.
Absolutely. Provide financial support. Could be for just day-to-day living expenses, paying off debts, maybe even future goals like kids' education, things like that.
And when we talk about life insurance, there are usually two common types people encounter.
Right.
Term life is one.
Right. Term life. What's the key thing to know there?
Well, term life insurance covers you for a specific time period, like 10 years, 20 years, maybe 30 years.
A set term. Makes sense.
Yeah. If, God forbid, you pass away during that term, your family gets the money.
Yeah.
But if you outlive the term,
Then what?
then the policy just ends. It expires. There's no payout.
Okay. So it's protection for a defined window, often when maybe financial responsibilities are highest, like with a mortgage or young kids.
Exactly. It's often a very cost-effective way to get a lot of coverage during those crucial years. Now, the other main type is whole life insurance.
And how does that differ from term?
Well, as the name suggests, whole life covers you for your entire life. As long as you keep paying the premiums, it doesn't expire.
Okay, so lifelong coverage.
Right. And here's another key difference.
Mm.
It also builds cash value over time.
Cash value, like savings?
Sort of. It's an amount that grows within the policy, tax-deferred usually. And interestingly, you can actually borrow money against that cash value while you're alive.
Oh, really? So it's not just a death benefit then?
No, it can be like a living financial tool too. A bit more complex, often more expensive than term, but it has that extra dimension.
So when do people typically get life insurance? Is there a trigger?
Often, yeah. Big life events. Many people buy it when they get married, or especially when they have children. It's about making sure their loved ones are protected financially if something happens to them.
That makes a lot of sense. Okay, so life insurance secures the future. What about protecting your well-being right now? That brings us to health insurance.
Yes, health insurance, definitely one of the most important types, maybe the most important for many people.
Why is that? I mean, obviously healthcare is expensive, but...
Extremely expensive, especially in emergencies or for serious conditions. Health insurance helps cover the cost of medical treatments. Without it, things can get financially devastating very quickly.
So how does it work? Similar idea.
Yeah, similar concept. A person pays a premium, usually monthly or sometimes yearly.
And the insurance company pays for what exactly?
They pay for a part, sometimes all, of the person's medical expenses. Things like doctor visits, hospital stays, surgery, tests, medicines, and also, importantly, preventive care. Things like vaccinations, screenings, keeping you healthy in the first place.
And are there different kinds of health plans?
Broadly, yeah.
Hmm.
You have individual plans just covering one person,
Right.
and then family plans, which can cover, the entire family under a single policy, usually with one premium.
And a lot of people get health insurance through work, right?
That's very common. Many companies provide health insurance to their employees as a benefit, sometimes a really good benefit.
Which raises an important question, doesn't it? What's the real impact beyond just paying bills?
That's a great point. It's about reducing that immense financial stress that comes with illness or accidents.
Right, so you can focus on getting better, not worrying about how to pay for it.
Exactly. It ensures you can get the right treatment at the right time without having to delay care or, worse, skip it altogether because you're worried about the cost. That peace of mind is invaluable.
Definitely. Okay, let's shift gears. What about when we're on the move? Let's talk about vehicle insurance, motor insurance.
Right. If you own a car, a bike, any kind of vehicle, really, this is crucial.
And it protects against what kind of financial loss?
Well, if your vehicle gets damaged in an accident, or if it's stolen. Also, very importantly, if your vehicle causes harm to another person or their property.
The liability aspect.
Exactly. And it's worth pointing out, in many countries, including India, for example, having at least basic vehicle insurance is mandatory by law. You have to have it to legally drive.
Okay, so what are the main types here?
Usually you'll see two main categories. First is third-party insurance.
Third party, meaning?
Meaning it covers the damage your vehicle causes to others. The third party, so their vehicle, their property damage, maybe their injuries.
Okay, so it covers damage to others.
Yes. But, and this is critical, it does not cover damage to your own vehicle.
Okay. So if you only have third party and you crash your car, you're paying for your own repairs.
Correct. Which leads us to the second type, comprehensive insurance.
Comprehensive sounds. Well, more comprehensive.
It is. As the name suggests, it covers, well, pretty much everything. Damage to your own vehicle, whether from an accident, fire, theft, even natural disasters like floods or storms.
Okay.
And it also includes that third-party liability coverage. So it bundles everything together.
So comprehensive is probably the way to go for most people, especially with newer cars.
Generally, yes. Especially for new or expensive vehicles, the cost of repairs or replacement can be huge. Comprehensive gives you that much broader protection.
Any other perks sometimes included?
Yeah, often comprehensive policies come with add-ons. Things like roadside assistance if you break down, towing services, maybe even cashless repair options at network garages, which is really convenient.
Good to know. Any practical tips for vehicle insurance?
Absolutely. Keep up with your vehicle's regular maintenance. Sometimes claims can be questioned if the car wasn't well maintained. And critically, renew your insurance on time. Don't let it lapse, even for a day. It can cause huge problems, legally and financially.
Right. Good advice. So we've covered life, health, vehicle. Let's tie it all together. What does this all mean? Why is insurance so fundamental?
Well, life is just unpredictable, isn't it?
Tell me about it. Accidents, illnesses, natural disasters, unexpected deaths. These things can happen at any time to anyone.
Exactly. And insurance acts as that safety net. Think about it. Imagine someone has a serious accident. They need surgery, maybe long-term care. The bills could run into lakhs of rupees or tens, even hundreds of thousands of dollars, depending where you are.
Right, without health insurance.
The family might be wiped out financially. They might have to take out huge loans, sell their home, sell other assets. It can be devastating.
Or think about a car accident. Maybe you bump someone's expensive car, or worse, someone gets injured.
If you're found responsible, you could be on the hook for all the repairs, the hospital bills, potentially huge sums. Vehicle insurance, specifically third-party liability, protects you from that.
So it's really that safety net analogy.
It really is. Insurance doesn't stop bad things from happening, unfortunately. But it helps you recover from them financially. It softens the blow.
Yeah, it provides a way back.
Precisely. Life insurance becomes a source of survival, truly, for a family that loses a primary earner.
Mm.
Health insurance ensures people don't have to choose between their health and their savings.
And vehicle insurance keeps you legal and saves you from potentially massive expenses if you cause an accident.
It's all about mitigating that financial fallout, keeping your foundation strong when things go wrong.
Okay, so it's clearly important, but navigating policies can feel overwhelming. How do people make smart choices?
That's key. It's not just about having insurance, but having the right insurance for you.
So, first step, read the fine print.
Absolutely. Read the terms and conditions carefully, really understand what is covered, and just as importantly, what is not covered, the exclusions.
Good point. What else? What are these terms like sum insured and deductible?
Right. The sum insured, or coverage amount, is basically the maximum amount the insurance company will pay out for a covered event.
Okay, the limit.
Yeah. And the deductible, sometimes called excess, is the amount you have to pay out of your own pocket before the insurance starts paying.
Ah, okay. So if you have a $500 deductible on your car insurance and cause $2,000 worth of damage.
You pay the first $500, and the insurance company covers the remaining $1,500, assuming it's a covered claim, up to your policy limit.
Got it. Understanding that trade-off seems crucial. Higher deductible often means lower premium.
Generally, yes. There's a trade-off between how much risk you retain versus how much you pay upfront in premiums. It's about finding your comfort level.
And what else can people do to choose wisely?
Well, don't just take the first policy offered. Compare different policies from different companies. Look at the features, the coverage limits, the deductibles, and of course the price.
Makes sense. Shop around.
And check the company's reputation, specifically its claim settlement ratio.
Claims settlement ratio. What's that?
It's basically the percentage of claims the company actually pays out compared to the total number of claims received. A higher ratio is generally a good sign. It's just they're more likely to pay valid claims without hassle.
That's a really useful metric.
It can be. And look, if it all feels too complex, don't hesitate to consult with a licensed insurance agent or advisor. They can help assess your needs and find suitable options.
Good advice. Is it a set it and forget it kind of thing once you buy a policy?
Definitely not. What's fascinating here is how dynamic it should be. You really need to review your insurance policies regularly, maybe once a year, or whenever something significant changes in your life.
Like what kind of changes?
Well, like getting married, buying a new home or car, having a child, starting a business. Your responsibilities change, your assets change, so your insurance needs change too. What was adequate 5 years ago might not be enough today.
That's a really important takeaway. Stay proactive. So wrapping this up then, it seems abundantly clear that insurance, when chosen wisely, isn't just an expense. It's a wise financial tool, a cornerstone maybe.
I'd agree with that. It helps to protect individuals, families, even businesses from those unexpected financial shocks.
We've talked about life insurance creating that legacy of support. Health insurance safeguarding well-being, both physical and financial.
Right.
And vehicle insurance protecting assets and liabilities on the road. Each plays such a vital role in securing our lives, really.
And it comes back to that core idea.
Yeah.
Always remember, insurance is not really an expense in the traditional sense. It's an investment
An investment.
in peace of mind. That's the ultimate return.
So maybe the final thought for everyone listening is this. How does understanding these essential protections actually empower you?
Yeah, how does it let you live more freely, maybe take calculated risks, pursue your goals, knowing you've got that financial safety net woven into your life?
And perhaps more immediately, what proactive step will you take today after hearing this to secure that invaluable peace of mind?